Hello, everybody. Welcome to another session of the Gold Forecaster Index. It's an index that I created to predict the gold price. And in my last video a month ago, I said that the gold price would go down, and that's also what happened. As you can see here, the gold price hit a high here somewhere in February, and then it crashed down below 1300. And I think this trend will continue. I have a lot to talk about today. Let's look at the gold forecaster index first. That's the red line here. Another version is here, also the red line. And you see that the trend is still going down, still in negative territory. And well, there's improvement here to the upside, but I expect that the gold price will still be going down, or at least be flat. Let's go over the leading indicator chart here. That's the blue line. And you can see that the economy is not doing so well. You can see that the trend is declining, and the last number is really low here. So I expect that the coincident indicators will follow. Well, it's not zero yet, but it could happen anytime soon. So that's one thing. Economy is not doing well. Keep that in mind. Capacity utilization. You can also see here a blip down. It's still pretty high, but it is going down. So that means that inflation could also be going down as well. Now let's look at the money supply. We know that the Federal Reserve is decreasing its balance sheet, but I'm pretty sure that this will end soon. At least at the end of this year, we will see that the Federal Reserve will start increasing the balance sheet again. So this trend should reverse soon. That's also the reason why they do that, is because the economy is not doing well. Let's look at the producer price index, which is the leading indicator for consumer price index. You can see that the blue line, the producer price index, is now at 0. It's really at 0 now. And that means that inflation is likely to go to 0 in a few months from now. So I wouldn't expect any inflation, any price growth in the coming months. It would be below the 2% range at the end of 2019. So that's also another reason why the Federal Reserve will stop decreasing its balance sheet and stop hiking rates. So that's a positive for gold. Now let's look at the 2-year yield. Another reason why the Federal Reserve will stop its quantitative tightening. So if you look at the 2-year yield, most of the time the red line, the Fed funds rate, is always lower than the 2-year yield. And you can see here that the Federal Reserve has almost reached its ceiling here. It cannot increase it above the blue line. So there's a lot of chance that they will pause the rate hikes. And that's good for gold. Now let's look at the 10-year yield minus consumer price index, which is the real interest rate. This is going up. And I know that the 10-year yield will be going up, more likely to go up, because there's a lot of debt that will mature in the coming 3 years. So it's likely to go up. And what that does is more people can buy US treasuries at higher interest rates, which is bad for gold because gold doesn't give any interest. So So when this blue line goes up, the red line, which is the gold price, will be going down. And because the consumer price index will also be at zero at the end of this year, I guess that this blue line will be going even higher, and the gold price is more likely to go down. So a lot of negative news for gold, right? But there's one thing that is very positive for gold, and that is the US trade deficit. We just got the December number out, and you can see at the red line here that the US trade balance hit a new record low, which is a deficit of around 700 billion. And yeah, Trump said that he would decrease the deficit, but that's apparently not the case. And if you look at some of the articles here, we can see that the biggest culprit was China. So the US has a deficit with China of 400 billion. So Trump tries to win from China, but it is not happening. And because of this bad number, which is bad for the US dollar, we have some positive news for gold. So that's why this little blip goes up. That's because of the trade deficit that widens. But we are still in negative territory, and I think it's still advisable to stay in cash and not buy gold at this time. So I think we will stay flat. I hope you will take this advice, and I'll see you in the next video.